This is Market Pulse USA, breaking down today's biggest business and financial headlines, fast and simple. What a day on Wall Street. On Monday, U.S. stocks went on a wild ride, diving, soaring, then bouncing all over the place, as investors hunted for any sign that President Trump's tariff plans might be paused or negotiated. It all started with global markets tumbling over fears that Trump's sweeping tariffs could stall economic growth. At the open, U.S. markets plunged into bear territory. That's a 20% drop from recent highs. But just an hour later? Boom! Stocks shot up. Nearly 900 points on the Dow, all thanks to rumors that the White House might delay those tariffs. Spoiler alert. That rumor didn't last. A White House official shot it down as fake news, and then Trump himself crushed hopes of a ceasefire, saying he's considering slapping an additional 50% tariff on China. So yeah, back down went the market. At the end of this rollercoaster day, the Dow closed down 349 points, or nearly 1%. The S&P 500 slipped 0.23%. The Nasdaq barely held onto a 0.1% gain. Meanwhile, the market's fear gauge, the VIX, hit levels we haven't seen since the early days of the COVID pandemic, spiking past 50 midday. That's a huge red flag for volatility. Investors clearly want one thing: a break in this tariff fight. And when they don't get it, the market throws a tantrum. Art Hogan from B. Riley Wealth said it best: the stock market vigilantes have spoken. We need rational thinking with trade policy, and so far, we've seen none. At one point Monday, the S&P 500 jumped 8.5% in just over 30 minutes, before dropping all those gains. That's not normal. That's panic and hope in a blender. There was one glimmer of optimism. EU leader Ursula von der Leyen said the bloc is ready to negotiate and even drop tariffs on U.S. industrial goods. But Trump was quick to shut that down, saying he's not looking at pausing any tariffs. Beyond stocks, bonds took a hit too. Investors dumped 10-year treasuries, sending yields back above 4.15%. Earlier in the day, we saw international markets crash. Europe's major indexes dropped between 4% and 5%. Asia? Even worse. Japan's Nikkei fell nearly 8%, and Hong Kong's Hang Seng plunged over 13%, its worst day since 1997. So what's next? Trump has hinted that even more tariffs are on the way, including auto parts, lumber, even microchips. Goldman Sachs says if he follows through, a global recession is almost guaranteed. JP Morgan's CEO Jamie Dimon warned Monday that this kind of trade policy raises prices and slows growth. Trump, on the other hand, says falling oil prices and interest rates mean the U.S. is doing just fine, even claiming the country is now making billions a week from tariffs. But investors? They're not buying it. Not yet. If you want to stay ahead of the chaos and get the clearest breakdown of what's really happening in the markets, don't forget to like this video, hit that subscribe button, and turn on notifications so you never miss an update from Market Pulse USA. We'll be here to help you make sense of it all, fast, simple, and no fluff. See you in the next one.